Hello, welcome to my YouTube channel on long-term investment, where we study how to manage our money and secure our long-term future. In our last video, we have seen few candlestick patterns, and in this video today we will cover few more candlestick patterns, which is piercing line, bullish reversal pattern, and dark cloud cover, a bearish reversal pattern. Today we will finish the candlestick patterns. Piercing line, which is a bullish reversal pattern. Commentary here, the piercing line pattern shown in above figure 3.24 is essentially a opposite of dark cloud cover. We will see that in next slides. This pattern occurs in the downtrending market. So piercing line only occurs in the downtrending market, and is a two line and or 2-day pattern. So this is a combination of two candlestick patterns. The first day is black, which supports the downtrend. Here we can see the trend was down, previous trend, and the first candlestick is a black, which supports the downtrend, and second day is a long white day. This is the second day, long white day, which opens at a new low and then close above midpoint of the preceding black day. So here it opens at new low from here, and then prices keep climbing, and it closes above the midpoint of previous day black day. So somewhere here is the midpoint. Rules of recognition. The first day is long black body continuing in the downtrend. Here it is, the first long black body. The second day is white body. Here it is, the second day a white body, which opens below the low of the previous day. That's low, not close. The second day closes within but above the midpoint of previous day's body. This is the piercing line. Scenarios and psychology behind the pattern. A long black body forms in the downtrend, which maintains the bearishness of the market. A gap to the downside on the next day's open further perpetuates the bearishness. However, market rallies all day and closes much higher. In fact, the close is above the midpoint of the body of long black day. This action causes concerns to bears, and potential bottom has been made. A candlestick charting shows this action quite well, where standard bar chart would hardly discern it. So here the candlestick chartings is very graphical. Here you can easily at one glance you can see what is the price action on the bar. A pattern flexibility. A white real body should close more than halfway into prior black candlestick body. If it didn't, you probably should wait for more bullish confirmation. There is no flexibility to this rule with a piercing pattern. A piercing pattern's white candlestick must rise more than halfway into black candlestick's body. So this is very important. The white candlestick should close more than halfway of previous day's black candlestick. Here is the example. You can see the previous downtrend, and there was a black body here, and next day prices open lower than the previous day's close, but however prices kept climbing up, and then for few more days there was a uptrend. This is the example of piercing line. A dark cloud cover. This is a bearish reversal pattern. A dark cloud cover is a bearish reversal pattern and the counterpart of piercing pattern, which we have just seen now. Since this pattern only occurs in the uptrend, the first day is long white day, which supports the trend. Here we can see there was an uptrend earlier. Our first day is white body, which supports the previous trend. The second day opens above the high of white day. This was the high of white day. Second day opens here above the high of white day. This is one of the few times that high or low is used in the candle pattern definition. Most of the time we have seen that we are seeing at the closure of the body, not the high or low. But this is the first time where in the dark cloud cover we are seeing that the prices in the next day are opening above the high of previous day. Trading, and then those prices trade lower throughout the day, results in the close being below midpoint of long white day. Though the prices open at the higher point here, they kept going lower and they have closed somewhere below the midpoint of previous day white body. This reversal pattern, like the opposite piercing line, has marked effect on the attitude of traders. Because of the higher open followed by the much lower close, there is no exception to this pattern. How to recognize it? The first day is long white body, which is continuation of uptrend. Since this is a bearish reversal pattern, it will continue the previous uptrend, which is the white body. The second day is black body day with open above the previous day's high. The second day closes within and below the midpoint of previous white body. So these are the 3 points which will confirm that this is the dark cloud day. Scenarios and psychology behind this pattern. The market is in an uptrend. Typically in an uptrend, long white candlestick is formed. Next day the market gaps higher on the opening. However, that is all that is remaining to that uptrend. The market drops to close well into the body of previous white day, or below its midpoint. Anyone who was bullish would certainly have to rethink their strategy with this type of action. Like the piercing line, a significant reversal of trend has occurred. A pattern flexibility. The more penetration of black bodies close into the prior white body, the greater the chances of top reversal. The first day should be long day with the second day opening significantly higher. This merely accentuates the reversal of sentiment in the market. These are the dark cloud cover pattern. A dark cloud cover is also beginning of bearish engulfing pattern. Because of this, it would be make bearish engulfing pattern a more bearish reversal signal than the dark cloud cover. So they are more, the dark cloud cover or piercing line are more or less similar to the engulfing pattern. Here we can see the previous day. Here the trend was up for few days and then there was a long white body. Second day the prices opened higher than the previous day's high or close, and then prices kept going down until they crossed below the half of the previous day, and then there was a short reversal of trend for few days here. This is the dark cloud cover. What is the psychology behind candlesticks in day trading? How it is psychologically defined? Like every day stock prices change, but every day companies future or companies business do not change or also are not affected so much. So psychology behind candlesticks in day trading is that in the first few minutes of trading day, a great deal of overnight emotion is captured. Sometimes special events will even cause chaos. However, once a stock or commodity does open, a point of reference has been established. So once that stock, let's say Indian stocks open at 9:15, that opening point is established. So if it is a bullish, it will open slightly higher. If it is bearish, it will open slightly lower than the previous day. From this reference point, trading decisions are made throughout the day. As the trading day progresses, extremes are reached as speculator emotions is tossed around. These extremes of emotions are recorded as high and low of the trading day. Finally, the trading day ends and the last trade is recorded as the closing price. And this is the price that many will use to help make decisions about their position and tactics they will use at open of the next trading day. So this is the psychology behind candlesticks trading day. So what we have seen in last 3 to 4 videos is about candlestick patterns. So either this is a single candlestick or combination of 3 candlesticks like in the star, morning star or evening star, or the 2 candlestick pattern, either the engulfing pattern or the piercing line or dark cloud cover. In our next video, we will cover the chart patterns. Now we are moving from candlesticks to the chart pattern. Again, what are the patterns? Patterns are the distinctive formation created by the movements of security prices. These patterns reveal the ongoing struggle between the forces of supply and demand. Price patterns are broken down into 2 groups, reversal or continuation. So we will see the reversal pattern as well as continuation pattern. And that's it for today. Thank you for watching the video. Please keep watching this space, like my videos, subscribe to it, and again I am passing the knowledge to next generation which I learned late. Thank you very much. Thank you. Have a nice day.